Good evening, good evening. Welcome to the live Facebook. That's right. While those of you who are with us, I like to welcome you to our regular Wednesday night sharing of information, economic, stock market, which is really my favorite, and a host of other things which is related to volume spread analysis, stock markets, and pretty much what I do in life. Much of it I've been in the stock market. And also for those of you who are attending for the first time, thank you for coming. And of course, we're going to be starting shortly in here as more people will be coming in to join. But again, this is a very niche topic, especially talking about China. Economies usually should be a Chinese speaking in Mandarin. All right, there will be more people listening in Mandarin. So tonight it will be my attempt in here, your host, Martin Wong, try to explain to you what I understand from the China crisis and how it's going to be impact you in here. All right, so thank you for coming. For those of you who are with us, please share this video in your timeline. All right, welcome everybody. Welcome all of you to our live Facebook at Martin TF Wong. And tonight we'll be looking into the economic situation after China reopened back in so-called December 2022, and much of it is already been seen and heard. We have the recent flooding in Beijing because of the typhoon Taikao, and there's another one I can't remember the name. And also the last weekend we have another flooding due to the another typhoon or possible release of the water in Shenzhen Dam in here, and also part of the northern Hong Kong was flooded. I think some of you may have seen those videos. And the climate change, has really caused a really big mess. We have seen also the earthquake in Morocco and also the Libya flooding. My heart goes up to them and my sympathy to them, and I hope that they are able to find their loved one and recover in soon. But on this part of the East, especially in the scope of the ASEAN and China and respective to the US market. So I'll be looking into the China in economic slump and how it affected the stock market in here. All right. So this will be the talk for tonight in here. And do share, and if you have any question that you want me to answer pertaining to tonight's topic on China in here, I don't claim to be a China expert in here, but I have made and study the China economic as well as their stock market movement over the past couple of years, starting even before the pre-COVID in here. So I could say that I know a little bit more than most people in here. So let's get on to where we are tonight. And tonight's agenda will definitely be on this red flag in here. So the China economic crisis on the impact of the stock market. How did China got into this issue, which we see now? We also see the property default by Evergrande and also Country Garden. We have seen that, and Country Garden is also have a big property in the Iskandar, what is in the on Johor, right, nearer to the second link of the causeway in Singapore in here. I can't remember that project. What was it? I know it's a country home. If anyone who remember, pencil those in there. I really hope that you can remind me of some of the projects in here and ways that China may overcome this crisis. Are probably looking at the method or the way of economic policies and analysts look into it. I'm not much difference into it here, and what kind of opportunity that is available in China in the respective to the stock market in here. And if you should have any trading opportunity, I'll definitely notify you with respect to China. So tonight the focus will be on China market in here. I do hope that you will learn something tonight in here. So let's get started. All right. So China, like it or not, is the second largest economy in the world, okay, after the US market. And that's many claim that the US market has been the leader since the Second World War. And we know before Second World War, the British was one of the most powerful before that, and almost leading just before Queen Victoria. The first Queen Victoria, number one, was really the major power in the East India. They all know that, right? They also colonized Malaysia back in the early 19th century, all the way back to our independence in 1945. 1957, right? 1957. And since that, after the Second World War, the U.S. was a major economy power with their advancement on the Navy, the military in here, and also the Bretton Woods, where the gold was taken off from the monetary system in here, and they're able to inflate and the fiat currency, which is the US dollar in here. I'm sure you also heard about the US de-dollarization by the BRICS country in here, where China has actually made a big contribution to the BRICS, which was only last month about 10 US dollar in here. So there's a lot of talk about China will overtake US as the world's super economic power, which is only like 7 trillion. So give it a bit of time, they overtake in here. But then also 10 years ago, we have the China, yes, thank you, James, the Garden Forest City in JB. That's right, the Garden Forest City. So 10 years after the China and Belt Road that you all may heard of it, it's already 10 years already. When it first come to it is 2000 and I think 2014. It's already 10 years in here. Many countries may have affected by it or benefited from it, depending how you listen to the last 10 years in here. But again, China was the forefront where they wanted to link, I think, Shanghai all the way through the Silk Road to London in here, to bypass the American in here. And yet right now their plans have switched. I do understand that now they were talking about small and beautiful. Those days was big and bold, right? Because there's a lot of money in here. But 10 years has passed. Some countries were very happy, some were not, like Sri Lanka, you heard of it, has gone pretty much bankrupt due to the Western port they were trying to build over there. And China is trying to also, in the South China Sea, was trying to extend its naval forces and claiming territorial, which was very unfavorable. I think you know about the recent claim that pushes from the China all the way to the Sarawak Sea, the South China Coast, and many countries like Vietnam and also Philippines were very unhappy and wanted to bring this up in the ASEAN summit. But unfortunately, President Xi is not coming in here. And this is due to pretty much of what President Xi, which is the head of the CCP, were trying to address the measurements that we have right now. So overall, what we have seen in the past is the China CCP, China Communist Party, President Xi trying to extend its influences and policy to the third world country. That's what we have seen. So from this world map that you see in here, given as far back to Cuba, South America, they were buying a lot of the mines, remember? The batteries, rare earth material in Congo, those material which used to gallium, right, needed to make the semiconductor. So they were main dominance into pretty much of the entire world in here. 10 years has passed, so just a little bit of reflection in here, and you've seen where China is today, strong and bold. But something came, right? The unfortunate event that many of us are still grappling is the COVID hit China, and it had a 3 year of major lockdown where typical mainland China people were not allowed to travel, and subsequently after 3 year lockdown and suffer almost constant retesting the so-called COVID-19, and they got fed up with it. On, I believe it's on the 12th or 13th of December 2022, they got at it on the very fast mode and opened up China in here. And as such, during that time, people thought that China could rebound after 3 years of lockdown, but unfortunately, China saw in the last two quarters beginning in April, it started to fall as China at the same time is trying to uncouple from the Western country, the China, and we all know about the China and tech war that is ongoing, where US is trying to restrict many of the chip making capability or the AI chip to the China military as it begins to extend its forces and the naval presence in the South China Sea. And of course, the main goal was Taiwan, right, which I will talk about in here. So as you can see, even going back to September 7, the China export fall for the fourth month, which is once a reliable growth engine, and that was a really concern what we have seen in the market in here. And this is also one of the biggest drop in 3 years. So more issue is coming out in here is whether China economy can be fixed as it struggled in here. Many economists was sort of looking at it. But as early on, about 2 or 3 years ago, I think going back to 2 or 3 years ago, people asked me to pick US or China. Of course, I being a Chinese, I still pick US market, like it or not, because, the stock market is a place where I do believe greed, and also, greed and profit, the dollar and sign is the most important thing, above of welfare. And so I'm sorry, I have to be realistic in here. If you want to be into welfare, you don't want to come to the stock market. It is, right? So has China run out of steam? So people are talking about in here whether they can overtake what we talk about the US as the super economy power, yet to be seen. Now, on top of that, we also have the Evergrande disaster that we've seen in here. Let me just make it a bit smaller, and you can see that China property just as far back on last month filed for US bankruptcy protection in here, and that was really one of the straw that broke the camel back. And actually the stock was already been so-called suspended when they started to not able to pay the loan in here. But what they did for really sunk the big ship. The China property was filing for US bankruptcy protection. So you can see the stock Grande at one time was 18 Hong Kong dollar, drop right to about just $2. But recently, because of Country Garden were able to pay delay its payment, and the market actually rebounded back in here. All right, so this is the situation that, and people who have invested in China previously last 2 years, especially 2019, 2020, just before the COVID, they were very, very big and gung-ho on some of the tech company like Tencent, Alibaba, Didi, Pinduoduo, right, NetEase, and also JD.com. But unfortunately, many of them actually turned to the downside eventually in here. So one of the reasons why we do see China where it is 30% of the China economy were actually contributed by property. Okay, it was contributed by property, and that was the only way so far, going back to even Deng Xiaoping policies. Now, if you look back into why more people were affected by the property, you have to see how property are sold in China. Now, the property, the distinction between the property in Hong Kong, which inherit the legacy system from the British, pretty much like Malaysia. When we buy property, right, we actually pay 10%, right, as a down payment in here, and the rest we borrow from the bank. But we have a middleman, which is actually the lawyers. We have engaged lawyers, and once the work of the property is complete or work in progress, the billings will be sent to the lawyer will pay accordingly in here. So that's how we as house buyer are protected. But in China, due to the policies previously in the Deng Xiaoping era back in the 60s or 70s, the government were responsible for building a lot of the housing in here. As the China began to open up after the WTO emission in here, so Chinese government were looking for more private enterprise, all right, to take up this so-called duty of building housing for the people. So they came up with a law that rather burden them to get the people to pay up first. They came up with a rule that you need to pay up higher deposit, like something like 30 or 40%, then you borrow 20%, I think, minimum 20%. The rest you have to borrow, and you have to pay directly to the developer. So in this case, the bank will pay directly to the developer. So as such that you have heard many cases, property after or uncompleted after receiving all the money, and you saw also people moving into property that is unfinished, but they still have to pay 30-year loan. It's really, really sad. There was even a documentary on China News Asia talk about this young man in here bought a property, paid 20%, borrowed another 1 million yuan from the bank. Then the price dropped by 20 to 30% because of the slump that we see in here. Yet he took a 30-year mortgage, and right now he said that he may end up losing his job, and 30% of his salary goes into paying the property, which is almost has lost 20 to 30% in here. That's the dilemma that we are seeing in here. So as a comparison to our Malaysian side in here, how much is it affected? The residential property purchases in Malaysia is only less than 3% of the GDP. All right, GDP is only less than 3%, but in China it's 30%. So you can see the scale, the magnitude scale of it. Even in Malaysia, with 3% or so, we can feel the impact when properties slow down, right? Pretty much of the economy slow down because there is no what we call the big ticket or big item purchase effect. So when you buy a house, you buy furniture, you buy aircon, you buy refrigerator, and you buy lightings, those kind of things. Those are generally the big ticket item, and these are the ones that's very beneficial. Hi Nora, thank you. Welcome Nora, good to see you again. So that's really what's happening on the China in here compared to Malaysia. Just let us get Malaysia 3% contribution to our GDP. China is 30%, almost 10 times. So after reopening in December 2022, then came, fast forward to today, we have the China 5 mini crisis that group up into one big crisis. All right, just now we talked about the property. Then the other one I don't have time to dwell in, which is really out of focus, is the local government debt. Now, as we said before, one of the things that you have the shadow banking, or what we call the financial structure, right? A lot of the provincial, or what we call in Malaysia is state now. The provincial in here get some sort of funding from the government off the balance sheet in here to build infrastructure. So many times you hear a lot of the project that they are building, like trains, bridges, all this, because they felt that really useless or ghost city. You heard that a lot, right? That goes to nowhere. It's because the government, local government, need to spend them, and one of the way to spend them is on infrastructure. And right now, many of them got into debts because the economy is not churning fast enough, right, to give the kind of return that they have. And right now this is really saddening with they are the so-called China government may or may not bail out some of these local provincial, but what they're likely to do is to drag on. Then the third thing you heard is the youth unemployment, which was as high as 21% until at one point the youth employment decided not to report it, right, which is the last 2 months of it in here. The export, as China and US are still engaging in the trade war started from 2018 during the Trump era in here, many of the industry in China was affected, and we have seen iPhone and iPad and MacBooks, right, during the COVID lockdown, many of them actually moved over to India. The biggest beneficial was India, and right now it's also Vietnam, and not to forget Malaysia too in here. So you have seen all those are impacting very much of what they can sell to the world. Remember, China used to be the factory, the factory of manufacture for the world, but no longer now. Now you have India, you have Vietnam, and you have Laos, and you also have Malaysia. And then fifth is deflation, right? Deflation is something that we don't get it in Malaysia or in the West or in US. What we have in Malaysia is inflation. As the economy is slowing down, prices tend to drop. And when prices drop, people tend to delay their payment. Can you imagine? Let's say I want to buy a TV, okay, but I know the prices are coming down, and a lot of the businesses are cutting prices, right? So because they cut prices, right, then I myself delay lah. I wait for prices to drop lah, right? So because I delay, that you don't have the what we call the velocity of money in the economy. So everything slow down. When money don't turn around, then you can see that's why a lot of businesses really close shop. You can see many businesses after the COVID, and there were even talks about many interviewing. When you see some of on the YouTube, they interview businesses, they could survive the COVID, but once the economy reopened only, right? They did not get the business they do, and they have to close down. I do believe at the same time, during the COVID, the China was also giving out handout for assistance, just like our Malaysian government was giving in here, as such that many of them may survive over the COVID. But when the China reopened, they expect people to go back and work, but unfortunately, rather than people working, a lot of them couldn't even make end meet, and that's why we get the situation that we see. So the China, so as a summary, the China economic red flag, as you can see before, this is a GDP after the first lockdown, where the lockdown got a minus 10% in here, and it went straight up. So during that time, 2021, 2022, China were able to maintain a 2% or 3%. Then you have the last COVID lockdown during the Shanghai in here, and then 2023 reopened, a big bang, but slowed down. They tried again 2023 in here, and this is where we are, the really slowing down that we are seeing in the GDP. So you also have the export, which I've talked about, weaker demands as the inflation gets higher in many of the countries. Things are becoming more expensive in here. There's generally a slowdown. Then you have supply chain, and right now you also have the higher crude oil prices in here that is really bringing down much of people buying less. So that's why you have less order for the export in here. And then we did talk about the CPI figures, which is the deflation that we're getting, and the high youth unemployment, which we have seen so far. And not to forget, I'll talk about also the yuan versus the US dollar. For that, not so much, but for us Malaysian, will be the US dollar versus MY ringgit. Now you'll notice, right, previously we had about 4.5, now it's touching back to 4.7 already, right? So maybe 4.75. Remember, as yuan get weakened, our ringgit will get weakened too. New loans are getting lower and lower in here. You can see as people are not buying houses because houses prices are coming down. Again, that's the point what we talk about deflation. If houses prices are coming down, people rather wait, and when they wait, that's where they might take less loans and blah blah. Now, in the past, China has been heavily reliant, much of it on investment. As I said before, building of bridges, building a highway, building of trains, and so on and so forth by the local government. That was how they were able to grow. When you have to build infrastructures like the bridges, roads, you have to buy a lot of steel, right? You have to have a lot of cement, right? And cement, steel, and copper, a lot of this mineral, and that's why a lot of country like Australia and South Africa, those who sell this kind of raw material really benefited. At the same time, I've talked about China being the factory of the world. So that time they do a lot of export. Now, right now, if you go over and see that many businesses have slowed down in the major first-tier city like Shenzhen, Shanghai, Beijing, all this has slowed down, and also Dongguan, which is the one closest to Shenzhen and the South China where the heavy manufacturing were really doing. So there has been a great slowdown in those areas here. Right now, why is this important is we also have to look back at the past policies of the China Communist Party, which was very active in the COVID. Much of where China is was the huge crackdown. You all still remember Alibaba, right? 2018, 2019, Jack Ma was the king, and he was at a point of getting his Ant Group IPO, and he was talking and blasting the CCP government, and all of a sudden what happened? He went on disappeared, and right now he's allowed to I suppose he was allowed to come out again, and he been re-educated. He kept his low profile in here. He went for many countries to visit. So there was a good article coming in. Much of the malice fall into the 2019-2020. If you look at the chart that we see in here, at one point you can see the Ant Group IPO. This red line here is the China index, Dragon Index. It went up high in January 2022. So then this is where they're suspended. Okay, China start issuing antitrust rule for internet company. Then you have Alibaba fined for 18 billion for anti-monopoly, open anti-monopoly Meituan. Then you have local app store to remove DD IPO, and the list goes on. And you also heard about those online educator, right? Overnight, we have many of the fresh graduate, the youth who employed, suddenly become jobless because used to be tuition teacher. They became very, very famous to being online tuition, like a celebrity in here, making 20 to 30,000 US dollar in here. But when the China came in and cracked down because they had a policy change, rather than focusing on economic, their primary goal is focusing on the people. I would say the people and what we call the common prosperity versus economic prosperity. I think that's a word you heard it before in here, and this is pretty much laid back to President Xi own upbringing, where he sees the Western styles of consuming is greed. right? If you look at here, the primary goal for presidency is to improve people livelihood, well-being is the primary goal of development, which I do agree as a public welfare being a communist party in here. But China being a population of 1.7 billion, it may not fare very well, where especially if people don't have food to eat, right? Or they don't have, they will start to slow down, like what we are seeing right now. They will start to save money, not spending, and that's why you see the entire world has actually slowed down. So if you look from here, these are the Chinese crackdown on the tech company, Alibaba. You got the educational provider in here. This is the property, burden of partner, waste of resources, 3 kids policy, demographic sustainability, welfare of young and children, over leverage, the end group. And there was also a lot of lending, peer-to-peer lending, where people go out and speculate lending, music exclusivity, and also Tencent was being hit, I think recently, because our presidency don't like children play too much game. They don't like them to play too much game on the in here, and also protection of small businesses. Meituan and Alibaba were in here. So if you look at being here, presidency policies has always been the party policy, the people policy in here, and this what really hurts the China economy in here. So you can see the priority complicated in this recovery that we see in 2023 right now, because he said before, unlike the Western style. Who's this guy? Anybody remember who this guy is? The one on the left hand side? Anybody remember who this guy is? Right? He is no other than Ben Bernanke. Right? Ben Bernanke was even before the current Fed chairman Jerome Powell. Before Fed chairman Jerome Powell was Janet Yellen, and then Ben Bernanke. That's right. I hope you all remember Ben Bernanke, right? Yes, T, remember, that's right. So Ben was very famous about the helicopter money, right? They call him the helicopter Ben. So he said that the economy is so bad to stimulate it. I think this is after the 2008, the global financial crisis, where the Goldman Sachs actually went down, right? And the CDO, all those CDO obligation, toxic, all the property slump in US in here. He said in order to stimulate the economy, he will throw money from the helicopter if he had to. And that's always been that policy of the American, really focusing on greed to spend people. So as such, that this is the very famous show, The Wall Street. You have not seen it, go and see it, Inside Wall Street by Gordon Gekko. He talks about greed is good. So that's why if you want to make money in the market, we as commoner, right, we have to side with where all the big guy is. As I said before, volume spread analysis, pretty much what we do is to follow the smart money. The smart money. These are the smart money. Like I said before, in US, many of the Congress, the politicians, they are the smart money. These Congress people can do insider trading and not get caught, and these are the people who benefit from the stock market. But in China, like the presidency and the inner circle of Xi, these guys are already powerful and rich. They control pretty much of the army and the economy in here, so they don't need the stock market. All right, so that's why I always side on with the US on that very simple reason. Greed is good, like it or not. Yeah. So if you look at the overall, China right now is looking into possibility of turning into a consumer-driven economy in here, as many of the economists, both local as well as of international in here, are saying that maybe China can so-called consume its way out. Unfortunately, based on the personality, pretty much at his age about 76 or 78, like President Putin, people like President Xi and Putin, they all have this thing, when they get to a certain age, the legacy, like how Kim Jong-un built the statue of his great-grandfather and his father in here, so that people will honor him and remember him, just like Deng Xiaoping, the father of modern China. So President Xi in here is trying to do the same thing, to have that very primary goal is to so-called welfare development and common prosperity. So he did say that if you just focus on consumer-driven, the Western style in decision making, is all very wasteful, and you'll make the Chinese people very, very lazy. He said that, right? He said that it will make them very lazy. So rather than be lazy and forceful, his goal is to make China as a world-leading industrial and technology powerhouse. We have seen that the recent, I think 2 weeks ago, you have the Huawei Mate 60 Pro that been launched, right? There was a lot of controversy that the microchip in there is running on Kirin and have SK Hynix RAM, and it has a capability of 5G and so on and so forth, that it could match the iPhone. But there are some tech people who dissected, say that these are old technology that is based on the DUX technology, but no doubt they're able to move on to the 7 microns, 7 nanometers or chips, which currently power the Kirin and is available on the Huawei. Today, or just yesterday, the Apple launched the iPhone 15, which is actually the 3 nanometers, even smaller, more powerful than that, and still running on 5G. I do think that China is about 5 to 6 years behind the Western, but more importantly is those machine which is produced by ASML, those are what we call the chip making machines. China need to get access to it. If they can't access to it because it's been sanctioned by US, and ASML is a Dutch company in here, so they are not able to access it. So the technology to use to advance their phones as well as their military is somehow quite far away. So with that, you can see this sanction will be ongoing and really impact and affected the Chinese market right now. So and also another thing is the Chinese has a very good legacy of saving money. So why does Chinese are good on saving money? I think this has got to do with Confucius teaching. I think Gongzi, right? Those of you who is familiar with Gongzi, you know, Gongzi always very look to the elderly, being very prudent, being ready frugal. So it's a lot about saving money and not so much on consuming and borrowing on credit, if you notice that, right? So if you look at the overall chart in here as an international percentage of consumption of GDP, right, you can see China don't consume a lot, they do save a lot. They are one of the lowest in terms of consumption in here. So that's why presidency know that in order to get people to other people to consume their product. They want to get other people to consume their product. They save the money, take that money and reinvest back, like what we said, you're building infrastructure so they can export more, build more, sell more, and that's how they became the a world manufacturer factory for everybody in here. So that was primarily the goal that we see over the last 10-20 years after they've been admitted to the WTO. I think it was 2013, 2008, after President Clinton brought in WTO. Just find out the year. Now going forward, in July 2023, the inflation rate started to drop. This is where we saw on this side of the chart, we see the deflation. Usually inflation need to stay above. That means prices are increasing. When it drop below, that means prices are getting cheaper. As I said before, the impact of it, people will slow down their purchases and maybe even save more money and not buy. When people not buy, not spend, not go to restaurant, you know lah, the impact, right? A lot of shop will close. And as shop will close, they are likely to lose their jobs. Their confidence will go down. When their confidence go down, they're going to even save more, not even going to spend now. And that is why a lot of the Chinese people are feeling right now here. Right, so the huge saving can also lead to low demand, which is why I said, and with the low demand, the debts is actually worsening, because what happened is that they will just use the amount to pay off the debt. And do remember, when you have high inflation, you can inflate the debt away, but if the inflation is going to deflation, the debt actually get worse because interest rate is inverse to the price of the bond. So keep that in mind, yeah. And lowering of prices means the debts will cost more, which is what I've just mentioned in here. So that's why you'll notice it's always been the plan of the Western country like US, Europe, and EU is to have high inflation and low interest rates so they can inflate all their debts away, which means future debts are really will be less, because why? The value of money is definitely more less in the future. So when your debts in future will definitely be less, and that's why they need. So right now we are looking at the US dollar versus ringgit. Now we are very close to 4.7. Right now is 4.67. The high that we hit was 4.75. You see from the chart here, 4.75 in here. If the situation does not improve, as we see likelihood this market will probably retest back 4.72 to 4.75. So be ready for that. And one of the reason why it's not so much whether all prices are going up now. Take note, all prices now is hitting $92 in here. So people say that, hey, we export oil. Why is our ringgit getting weaker? Right? It got nothing to do with the oil. It's got to do with because China is the largest trading partner to Malaysia, and pretty much when that slowdown that you see when China consume less or buy less from Malaysia, which that's how we impacted. And remember, previously, even at the pre-COVID, all right, we have one of the highest foot traffic or tourists from China, right? And not to forget all the Musang King durian, right? The Musang King durian was a time where they came in and buy all our durian and buy all our the hotels, the roti canai, all the Gucci bags, all right? The Hermes bag, but no more. Now they are saving more. There will still be some rich luxury people, but the numbers are very, very small in here, okay? So then lead to the next question where many people are talking about, will China invade Taiwan to distract from the economic crisis? Because right now, President Xi in here are feeling very, very weak because of the 5 crises that we've seen, the high unemployment rate, the property problem issue, the property glut in here. We see the local government debts, okay, deflation, and as such that many analysts are also saying that, hey, maybe it's a time to invade Taiwan. As we've seen, China is building their navy forces in here, and we have known they have the J-20 so-called stealth fighter, and also they are building their third aircraft carrier in here and building a lot of what they call artificial island in Philippines, extending their navy territorial claims on all fishery resources under the sea in here. So with this, there is a lot of talk that they want to invade Taiwan, right? And they're preparing it. You can see even the last few visits by the US Congress, like Nancy Pelosi visiting Taiwan, the Chinese aircraft, those jet fighters fly very close to the medium line in here, threatening. And there were a lot of also Navy exercises between the Americans, the Philippines, and the Japanese along that shore. Almost just prevented a World War III, and this could be the World War III. But at the same time, I do think underneath in here, presidency is just toying with the idea that it want to invade Taiwan and to perceive as a big brother in here. Now take note that Taiwan in January 2024 will be the Taiwan general election in here. So this is where you have the so-called pro-China and the anti-China will come and go into the election poll, and we want to see what is the interesting. If the anti-China party being the Kuomintang, I think the Kuomintang, right? If I'm not mistaken, the current president lady one. And then also you have the Foxconn president now has resigned, and he is also going into bidding for the presidential campaign in here. He's a pro-China because there's a lot of business in China in here. But I do think that on that premise, the invasion is real, but unlikely. Because why? It will trigger a global economic crisis. Whatever you see, if Taiwan gets invaded, whatever we talk about today, your Apple share will fall one. Because in order to take up Taiwan, the Chinese will put everything and invade. Then the American will put everything and invade the Philippines and also the Japanese. So you can see lah. And all this because of the chip war. Remember, Taiwan Semiconductors, they make those 3 nanomicrons chips in the island of Taiwan. And that's what China wanted to. But at the same time, TSMC is trying to build some of these wafer plant in Texas, the 7 nanomicrons and maybe the 5 nanomicrons, but majority of the technology is still in the hands of the Taiwan. The Taiwan is quite smart too. They don't want to put all their so-called golden goose in US, right? Then no one's going to protect Taiwan in here. So it's in my belief that China will not invade Taiwan because the consequence of it will be even worse than what it is right now. Now may be a pain, but if should China invade Taiwan, then it could be the end of China too. Maybe the fall of CCP, where the people may come out and revolt like what we saw on the Tiananmen massacre in here, and they may not be a communist party too. All right, so that is why. Now, Next question we're going to be asking is, will Malaysia be affected by the China slowdown in 2023 and 2024? Now, if you look from here, let me just bring up these two figures which I got off from the Visual Capital. You can see in here, China import from Malaysia, when China buy from Malaysia lah, if I'm not correct, right? 109 billion. China export to Malaysia, China sell to Malaysia, 92.2 billion. So if you look at that, we actually have a net surplus, which means China, right, buy more things than us, then we buy more things than them. So we have a surplus of 17.7 billion, right? So this really impacts us. So if there is a slowdown in China, which means the net surplus will reduce, right? So you notice, right, even we go back, our Bursa Malaysia, which does have a lot of factories, manufacturing, you know, like Inari, which have a factory in China. Then we also have many of the great tech, or what we call MPI, right? Those are the tech manufacturing one. Especially now, all the EVs have certain factories in China. All will be impacted because right now China is buying less. So you can also see as August 18, Malaysia posts the weakest GDP growth in nearly 2 years. As export slump because we're selling less, right? And if you look at it, because China is one of our largest trading partner, as such that's why what you see in the ringgit get weaker and weaker. 4.72 will be coming now. Right now it's 4.67 in here. So those of you who have invested in the US market earlier on may have benefited from the strengthening of the US dollar in here, and that's going to be likely the continuing trend. So value opportunity, value investing, yes. If you look at it, China has become cheap. Now, anything that normally goes down because of economic slowdown usually does tells you that China will give you a good representation of where the value investing is, but it's going to be a long wait in here, right? If you compare the global index, which is plus 12%, China is minus 6.6% from January 2020, all right? So right now, let me just move this up so you can see it better. Okay. So there need to be a long-term perspective if you want to invest in China. Yes, the opportunity is there. Now, if you look at the red line is Hang Seng. If you go back to 2017, right, 2017, let me just move it up a bit more here, right? 2017, from 2017 until today, Hang Seng is still down 33%. Okay, KLCI is down 18%. 001 is the Shanghai index, almost down 4%. But if you invested on the US market, which is the S&P 500, it's up 82%. And even in the COVID era, remember COVID era here, okay, the COVID era where we have the COVID market crash, right? The Fed cut rates. It simulated the stock market, and immediately the tech sectors and everybody went from going to office to work from home. So a lot of the technology stocks like Zoom boom, right? And yet right now the AI boom, and that what really carry the S&P 500. Now no doubt people are talking about the overvalue of it, and maybe should invest in China if you are a contrarian thinker in here. But over the last 4 years, the money was made on the US side in here. You can see almost 4% down, 18% down for KLCI, and Hang Seng was down 33% here. So if we take one example, the ETF, Exchange Traded Fund from China, MCHI, it's very cheap indeed, very cheap indeed. Let's look at the fact in here. If you have 10,000 invested in 2011, right, which is track the large and mid cap companies in China. So this is how you want to look at the stock market here. MCHI, it target about 85% of the stock market in here. But you notice you have 10,000 and today is almost unchanged. It went up to 20,000 in 2021. This is where a lot of the Chinese company, remember, went over to New York Stock Exchange, went over to NASDAQ to get listed, and their valuation actually went up. But since then, the government was so worried about the technology that they cracked down on that. They worry the West might steal their technology. As such, prioritize over policies, over economic reason, and that's where the stock market went. So at the end of the day, you think of it, right? The Western, no doubt, through their virtues, greed in general, But if you want to be with the smart money, that's where you have to follow. Whereas with the China, depends on the policies of President Xi, right? And remember, President Xi now can have more than 3 terms. He can be so-called the president for the rest of his life. I do not know, maybe 80 plus. If he doesn't surrender the seat, he will still maintain the same policies. And guess this is likely to be China going forward the next, 5-10 years? Would that be where we are looking at? We really don't know. But all I do know that if something don't work, you need to change the person. We had the Trump, it didn't work, we changed him. We changed to a Biden, it sort of worked halfway through, right? Now we have to see whether the Democrat policies in the US will continue to be prosperous, or what we see right now in here. So far it's been very good. Now if you look at the top 10 holdings of the MCHI, Chinese company, it's only Tencent, Alibaba, Meituan, China Construction, Ping An, JD.com, Net, Baidu, which is came out with their earning board, PDD, Pingdaodao, okay, and Bank of China, which represent, you can't see, let me just push it up a bit here, about 40% of the entire MCHI, okay. So if you look at it, you can use a smart Robie. All right, you can use a smart Robie. Just look at the Hong Kong Stock Exchange. You can see the market's really range bound for the last 6 months. 1st of June didn't go anywhere, have red Pentagon going down, but Tencent is rated 3 out of 10. PE of 23 times, while sector average is 15, so it's not cheap, you know, despite where the market is. ROE is 24 times, pretty good, right? And it's trading at a fair price in here, all right, for Tencent. Next stock we have, looking at the list here, is Alibaba, also red Pentagon, pretty much unchanged, you know, 80 plus over dollars in here. So that's why if you want to buy Alibaba at 10 cents, you really need to, you know, wait 2-3 years for this market to really go up in here. All right, PE is about 11 times, sector average is 21, so this cheaper. But look at the ROE. All right, the ROE is only 7%. Doesn't pay any dividend in here, and is trading overpriced because the sector average is 12% in here. So make sure you check out the Smart Robie, because Smart Robie right now has Hong Kong Stock Exchange if you are interested in the shorter term of the China market in here. So overall, in short, what we have seen so far is that the likelihood of the Chinese market will continue to dampen many of the stocks, especially in Malaysia too. I think US won't have so much of an effect. For Malaysia, our Bursa, because many of our companies have businesses in China, and if the exports slow down, like I'll show you the figures, it's going to be impacted in here. And not to forget the currency. The currency, our ringgit will definitely get weakened as Chinese yuan weaken in respect to the. So let me give you something very positive. Yesterday we completed our 6-month orientation for our VSA 360. For those of you who are listening, who are a member, I think I've talked about it yesterday in here, and the whole point is to bring the whole experience about the trade VSA and how we learn and how we share together on my Wednesday night live Facebook to you, the Smart Robie apps that you see, and also the VSA where we, the coaches as myself, were able to give more attention to you and able to train you to be a trader. Now, a very good news, just want to share with you. We have a competition. This time was much better. We do it over 6 months, and we don't have any incentive. Previously, we done it with some prizes at the end, and then somehow people tend to be motivated towards it, not in the right way. But right now, there were no motivation, more just from the pure goal of learning and becoming a good trader. So congratulations to Sukumaran, Lee Mei Fen, and also Chu Beng Seong, which is one of our regular listener tonight in here. Congratulations, James in here. And if you look back over the trades which I talked about yesterday, they have about 16% gain from 7th of March to 7th of September. Now take note, this is the I believe I think will be 99% Malaysian market. Lee Mei Fen a 15.6% gain, and James Chu was a 15% gain. But I think Sukumaran did pretty well with a 67% win rate. Lee Mei Fen a 60% and 52%. So that's how is it. And also good, Sukumaran was not able to came to it, so he sent me a picture of his recent holiday in Bali in here, saying that he'd like to thank you for all. So this is a picture of him here. I was going to ask him, where is this wall? I was in Bali, but I couldn't find it. So those of you who know where is this wall, share with me where is it. But definitely very nice to see our members able to go for a good holiday after a hard 6-month orientation program with us, and of course many of you who are not our member can definitely and feel free to join us. So congratulations again to our Trade VSA member success in here, and we are here because the years of experience and sharing and your great patronage and support to all our members in here. Congratulations again, Sukumaran, James, and not to forget Mei Fen, who are listening right now in here. Of course, for those of you who wanted to start this, you can contact us for this program that we are doing here. Join our premium membership, join our next intake, which is we are beginning right now. You can do the 3 months, 6 months, or the 12 months in here. Very, very reasonable, but the kind of experience that we're getting, the program that we have put up after many years of trial and experience, we found out that this program is the best. Learn at your own pace, and we have easy installment payment for those of you who wanted in here. So for our summary for our China market, those of you who came, let me just give it up to you, right? I do believe the China slowdown has already been priced into the market, right? Unless the big elephant, China invade Taiwan, we really don't know. That's the one in, okay? So I don't think it's likely to happen, China invade Taiwan, due to the reason I given in. If you're not, you can watch this video again. It will be archived in the YouTube in here. But then again, China investing is a patient game. A better way is share with you is our Pentagon Guided Pony Express, which we have shared with the members, the VSA Turbo Trading Method, and then the returns not too bad. Over 5 years, compounded average growth about 14 to 15%. But it's not a walk in the park kind of trade, right? You have to do a lot of trading, you have to practice. That's why we have the virtual trading platform, which I just shared with you the result of our trade participants, so they can really practice before putting real money in here. So believe in yourself, educate yourself, and invest in the system, any system. But we believe the VSA system is one of the best right now for the Malaysian market as well as the US market in here. Right, so because it can tell you whether the stock has up or down indicator, approved from our smart Robie apps. So that's all we have for tonight, and if you have any question or comment, feel free to pencil those in there, and I'll be back on Friday for our breakfast show, or you can join our Telegram for our stock market information, and also a gentle announcement starting 1st of October, effective 1st of October, our Friday breakfast show will switch on to a smart Robie US market, because going forward October, December, I do feel that the US market will be the market that you want to focus on, and I do hope that many Malaysians, with the introduction of fractional investing both in US and Malaysia, many of you can get about, especially your children. I was telling Sukumaran in here, very important is that now that you learn this skill, pass it on to your children. Make sure they learn this. Don't wait until when you hit your 70s and 80s, which many of our members only started to learn, right? So that may be something we don't want to happen to our next generation. With that, thank you for coming, and thank you and have a good night for the rest of the week. Thank you.